4, 3, 2, 1. Buckle your seatbelts, batten down the hatches. Coming to you live from the Blazar Podcast Studios in Space City, Texas. It's time once again for the Capital Catalyst Show, the podcast for entrepreneurs to learn the secrets of attracting, raising, and closing capital from high net worth investors. Dedicated to your success, this is the Capital Catalyst Show. Now here's your host, Brad Blazar.
Hey everybody, Brad Blazar here. Welcome to the Capital Catalyst Show. This is the podcast where visionary founders and bold entrepreneurs share how they've unlocked investor capital to scale their business and take it to the next level. Here's the thing. If you've ever dreamed of taking your idea, your dream, or better yet, your company, your vision further than you thought possible, you're definitely in the right place. Each episode, we sit down with trailblazers who have mastered the art of raising capital and using OPM, whether it's from angel investors, venture capital, family offices, or just high net worth individuals. You'll hear real life stories. You'll hear about their triumphs, their setbacks, and the strategies that turn bold ideas into thriving ventures. This isn't just about money, folks. It's about momentum. It's about philanthropy, and it's about fueling your growth, building the future, and learning from those who've already walked the path. So if you're ready to be inspired, you're equipped and motivated to raise capital with confidence, hit the subscribe button. If you're not following the show, join us every episode and ignite the journey with the Capital Catalyst Show, where capital meets courage and ideas turn into impact. Today's guest is a trailblazer. I know this guy and also his partner, and they have built a phenomenal platform in the real estate space. Today's guest is Ben Suttles from Disrupt Equity. Hey, Ben, how you doing today?
Hey, Brad. Thanks for having me on.
Absolutely. I've been following you and Ferris, and of course, we've met. I think it was out there, if I'm not mistaken, in Salt Lake City.
No, you met Ferris in Salt Lake, and then we all reconnected, I think, in Phoenix too. So
yeah, absolutely. But
Yep.
I want to learn a little bit about your backstory. I always like kind of rewinding the clock and going back and finding out what got people started. So would love to learn a little bit about, your past and really kind of how you stumbled into the real estate space.
Yeah, and stumble would probably be a good way to describe it. I mean, I think my wife at the time was pregnant with my daughter, who is now 12 years old. And so I kind of got to, you have obviously a lot of downtime. You can only paint the baby's room so many times and get all the furniture put together. So there was a lot of downtime to, kind of get caught up on reading. And I was always interested in real estate and the concept of real estate investing, but never really, a lot of people are like, how do you get into it? Where do you go? How do you start? And, I actually ended up picking up Rich Dad, Poor Dad, which is Robert Kiyosaki's kind of flagship book, right? Which probably a lot of listeners have read or at least heard about. And if you hadn't, you should go out there and buy one. And it was really just a light bulb moment for me, as to kind of putting away the employee mindset and really kind of getting into that business and investor mindset. And how do I kind of get into that? So started with kind of single family. I was in corporate sales at the time. So I was doing well there, still had a full-time job, but I was like, you know what, I'm going to do this on the side. And so I ended up flipping some houses, and ended up having some rentals, ended up being a lot more, not challenging. Well, it's challenging in a way, but I learned a lot, but I think it was just a lot more effort than the amount of money that I was making on a flip or on a rental versus the amount of time and effort and risk I was taking on. So I knew that I liked real estate, but I didn't really like the single family route. And so I started kind of looking into the commercial real estate world. And I was like, okay, what do I want to do here? Right. And everything's kind of like, well, I mean, how do you buy an office building? And, how do you buy the retail center? And, all that stuff just kind of felt very hard and complicated and, I guess risky. But, we'd all at some point probably lived in an apartment, right? So I started kind of gravitating towards multifamily. And I was like, okay, I got that. I had a friend that was kind of doing some of the smaller multi stuff, think 10, 20 units. And, and I was like, you know what, this is something I can get into. So, got myself educated on how to find deals, underwrite deals, and ultimately on the management side, understanding that piece of it too. And I dove all in 2014. Okay. So, I've been in the multifamily space since then. There's been a lot of ups and downs. I've probably made as many, I guess mistakes as there's possible, but I always learn from every single one of them. But that's kind of how that genesis there with kind of the light bulb moment with Rich Dad Poor Dad, and then ultimately pivoting to multifamily really kind of led us to me and Ferris understanding that there was other adjacent businesses and opportunities that could not only fuel our portfolio of multifamily properties, but also could just be standalone good companies to own and manage on their own. So
Mm.
from there, we started a property management company in 2019. We started an insurance company that's just multifamily centric in
Wow.
2020.
Wow.
We started, in 2021, we started Stealth Renovations, which is our construction company.
Mhm.
And so it's evolved, right? And then same time in 2021 we also created a sister company that does M&A and business
Okay.
acquisitions.
Sure.
And
Yeah.
so there's a lot of various things that were kind of born out of that one idea to get into real estate. I'm happy to unpack any one of those.
I love it. So you're basically now a completely vertically integrated
Yeah.
platform. Okay.
Yeah,
Everything
yeah,
going
yeah.
on.
We got a hold co, and then underneath that, there's various
Sure.
companies that we own and
Yeah.
manage, and they have their own leadership teams, and they
Love
have
it.
their own P&Ls, and it's not necessarily all meant to live and thrive off of our own portfolio.
Sure.
Each company needs to be standalone and be able to go out and get third party business and essentially kind of grow on its own.
That was going to be my next question is if
Yep.
you're not working on your own assets, are these different businesses providing services to other people? And so
Yep.
obviously you just answered that. No, I love that. I know it
Yep.
takes time to evolve and grow into that size of a business. But have worked for Waypoint Residential, which, is a huge multifamily platform and, probably 30, 40,000 doors now as they've scaled and continue to raise capital. So, we know the space very, very well. As you got started, and I love the story. How did you and Ferris connect? Were you part of a coaching community? Did you both know each other, friends and family?
Yeah,
How did you
no,
guys get introduced to one another?
great question. Yeah, I mean, I was, because I kind of came from that networking sales background. I went to every RIA, real estate related conference,
Yeah, so
networking
the Eddie
meet.
Gants of the world and
Yeah, I mean, I was out there, right? Yeah, yeah, I know,
yeah.
I know Eddie actually. He's a good guy.
Yeah, no, Eddie's a good guy. I know Eddie
Yeah.
very well. Yeah, he's
I still remember he had the big meetup back in the day where there'd be 1,000 people there. But
yeah,
that aside, no, I was a part of a coaching program. I had stepped back by that point. Before I met Ferris, I was already out of the program. I think I got what I wanted out of it, and then
yeah.
ultimately built the relationships that I needed. By that point, I'd already done a couple deals, and so I was
Mm,
kind of doing all this stuff kind of on my own. But I was looking for a partner, and a partner that would complement kind of my sales marketing side, and
okay.
kind of put more of a data driven, process driven, kind of analytical, I guess spin on what I wanted to do, and ultimately could run as hard as I could run. Right.
Yeah.
At the time I was still fairly young. I mean, I've aged a little bit. I lost a little bit of hair since we started this journey, but at the end of the day, he was a younger guy. He was driven, and ultimately we had the same goals, which was like, hey, we want to build a platform. We don't want to just go out and buy a couple multifamily properties and hope that it goes for the best. We wanted to build the foundation from
Yeah,
the
build a
beginning. And I
legacy.
think that alignment when you have partners is the most important thing.
Mm,
You can learn or delegate or hire people on for all the other miscellaneous stuff, but if you guys are not aligned in terms of work ethic, goals, integrity, and ambition, it's going to go off track at some point in the journey,
sure.
right?
Yeah.
And here we are. I mean, you fast forward from 2017 when we kind of consummated Disrupt Equity to now. I mean, we're almost 9 years into this journey.
Right.
But I met him just at a meetup that I was hosting in Houston.
Okay.
It was a multifamily meetup. I just took the initiative to kind of start it on my own. I was getting 5 to 10 people, and then it started becoming 15 to 20, and then it was 25 to 30, and then he started kind of coming out, and he was one of the guys who would stay around, ask questions, talk. Even though he's kind of a data driven ex Microsoft guy, very, very, articulate and loves networking just like I do. And so we just developed a friendship at first. And
Yeah.
then I think the really the way that you kind of test out a partnership is like, hey, let's go do a deal and just make sure that you're dipping your toe in before you really want to jump all into this
Right.
pool, right? And so that's what we did, and went really, really well. And that's when we decided to, kind of come up with the concept of disrupt equity. And ultimately, January 1st, 2018 was kind of the official birth date
Okay.
of that. And so we've been running and gunning ever since. Bought and sold about 8,000 units.
Mhm.
Currently have about 6,000 that we own and manage.
Yeah.
And so excited to kind of see what that next evolution is. Since then.
I love it.
Yeah.
Now, share with me a little bit about the growth of the company over the years. A lot of operators that are vertically integrated like to operate in their backyard. Are they all
Yeah.
Texas properties? Have you expanded beyond the borders of Texas where you've got assets in other states? And obviously, if you're vertically integrated, that means you're dealing with employees that are in other states, property management, obviously, and the other things that you're doing at each asset. But where's really been the focus as a multifamily platform? Has it been the Smile States, kind of the Sun Belt, or do you have
Yeah.
properties all over the country?
Yeah, no, not all over the country. I've learned the hard way. We've chased deals all over the country, but
Sure, yeah, we all
I've
have,
since,
yeah.
I've since decided to be a little bit more strategic, and so right now it's Texas, it's Georgia, and it's Florida,
Okay,
right?
so the
And we've
landlord-friendly states, yeah.
yeah,
Mhm.
so landlord friendly, high growth, high population, tax friendly. I mean, all the things that you would look for in commercial real estate. You're looking for those kind of tailwinds, and we're based here in Houston, so the majority, 80% of our portfolio is in Texas.
Yeah, yeah.
But I mean, we've done really, really well in Atlanta. We know Atlanta like the back of our hand, and so we've invested there. We own and manage there, as well as in Florida. We've
Mhm.
got one property we're looking to get more. That's kind of one of a test case. So we'll see if the Florida story continues. But definitely moving forward, it's going to be Georgia and Texas. And what I've learned, at least in commercial real estate, especially when you have your management companies, you need to go and buy deals where you can be successful
Yeah,
because at the end of the day, you have these numbers that are on a spreadsheet, but they don't mean anything unless you can actually,
sure.
get those
Yeah,
across the finish line. And that takes good teams, that takes good
yeah,
processes, that takes good execution.
right,
And
right.
so moving forward, kind of going into 2026, when we're shooting this, our goal is 2,000 units this year in Texas and Georgia. And within those markets, it's Atlanta, it's
Mhm.
Houston, it's DFW, and it's San Antonio.
Okay.
Um, I mean, Austin, I still believe in the Austin story. Lived there. Ferris is an ex-UT guy. But at the end of the day, right now, Austin's going through
It's a
some
little harder.
growing pains.
Yeah.
And I think we need to kind of take a step back from Austin for a little bit. But I still believe in the Texas and the Georgia story quite a bit. And I think,
Mhm.
people that are listening to this, if they ever wanted to start something, regardless of whatever industry it's in, make sure you can get to it and you can manage it. Because I mean, I have these people that get in and try to buy these companies, start these companies, and they're virtual. And it's like, hey, you've got to be there.
Yeah,
You've got to be,
absolutely. Real
and
estate
if
is
you're,
local. I totally agree
yeah,
100%.
yeah,
I got into real estate back in 2006 and been in it ever since. And of course, just like you started, single family sub twos, had a portfolio. And, it got to the point where it was a headache to some degree because I had a property, for example, up in the Woodlands. And then, I'd have to go and drive an hour and a half to go meet a plumber at another property out here in Katy. And then I'd have to, go chase down rent with somebody maybe that was a little bit late. And I just realized there's got to be an easier way to do this. Oh, well,
yeah,
geez, if I had 8 units all in one location, I wouldn't be driving all around town. But, when you get into real estate, you're so excited initially about the deal, right? It's just another little
yeah,
piece of popcorn in my portfolio. And you start looking at the passive income, but then you start realizing, okay, this guy gave me a month as a security deposit. So, let's just say it's $1,500. He did that, plus, of course, the first month's rent. And then you realize when he moves out, it was $12,000 worth of damage on the property because he had dogs he didn't tell you about, and he had kids that drew all over the wall. And you're
yeah.
realizing, oh, geez, man, I got to spend now another 12 grand just to get this thing make ready. So there's always those challenges that we always face and see. And, that's, of course, where smart operators like you have reserves and, hold back funds for the unexpected. There's always going to be that in any real estate model.
Yeah. Yeah,
It's
yeah,
just
and
not.
that's the same challenges that I had back in 2012 when I was flipping houses. Like, I mean, I
Yeah.
was running, and for anybody that knows Houston, Houston's a very sprawling town. So
It
you might
is.
be in Houston, but it could still be a 2.5 hour drive from one side to the other.
Yeah, when people say Houston, it's up in Magnolia, but it's
Yeah,
not Houston proper.
yeah,
So I
yeah.
totally get it. Yeah, I totally get it. No, I love it. As an operator and someone that's grown in scale to the size that Disrupt is now, what have been some of the biggest challenges, and more importantly, from those challenges, what have you learned as you've come out of them, perhaps?
Yeah, I mean, like I said it earlier in the podcast, I mean, we've made every mistake in the book. I think I really want to just double tap on partnerships.
Mhm.
There's great ones, where it's a force multiplier, 1+1 = 3, which is what I think me and Ferris have. And we've had bad partners.
Yeah.
that that have really dragged us down, made really bonehead decisions, dragged us into situations that could have been avoided, got lazy, went completely dark, and we never saw them or heard from them again. I mean, like, and so I would just encourage people, if you're going to start a business with a partner, that you do your due diligence, you understand, not only what they've done in the good times, but what they could potentially do or act like in the bad times. Because I think that's when really a lot of people's true colors start coming to,
Sure. Yeah.
to light. And so, pick your partners wisely. Don't get caught up in, the fear of being left out, right?
Mm,
I think a lot of people see some of the activity happening in one sector or another, and they're like, oh, I got to jump into whatever, multifamily, or I got to jump into crypto. And they do that without doing all their due diligence. And
yeah.
so,
Yeah. Yeah.
I think that's
Yeah.
another thing that we've learned the hard way, which is, we've got to wait, hold, pause. Can't be the next shiny
Sure.
thing that we go
Right.
chase,
Right.
right? We've got to start getting really, go deep, be a specialist on a few things, and then you can kind of start going horizontal from there. And that's what we
Mhm.
did on the multifamily side, right? I didn't start a management company until I'd fired 6 management companies over the course of 6 years. So, I mean, and so I knew how I wanted to do that,
Right.
right? But at first, it's not like I'm buying my first deal. Let's start a management company, because then you don't really know what you don't know, and you don't know what you don't want to happen, right?
Right.
So, I'd also tell people to kind of focus on, sticking in your lane and getting and being patient and being a specialist for a little while. And then you can start kind of going and chasing different things, right?
Sure. Sure.
So, I mean, I think those are some of the big things. I mean, I would also say, not holding onto the reins too long. This is something that recently me and Ferris have started to kind of do, where we're bringing in we've already had leadership teams, but bringing in somebody to kind of help us manage more of the day to day, and let us kind of take a step back and be more strategic. I think if people have a tendency to hold on to that for quite some time, especially if they don't even have partners, or they've just been used to
Mhm.
being the boss for a long time. And I think that can stifle growth. I think that could,
Mhm.
that could hold you back from really finding the great opportunity that you might have overlooked because you're kind of got your blinders on.
Sure.
And
Yeah.
so, always be finding people that you can delegate to, you can elevate up, or you can take some of the stuff off your plate. Because as a founder, as an entrepreneur, what I found out is, I can stay busy 14 hours a day, 7 days a week.
Mm.
There's that much to do.
Sure. When you're a
And
business owner, absolutely.
yeah, you have to be able to find the right team members, and outside of your partnerships, right? You got to have a good team that you
Right.
can leverage and you can delegate out to too. I think that was something that we learned the hard way, and
Mhm.
I think, as a founder, you kind of get kind of burned out after a while, and you're like, oh shoot, man, I'm pushing 70, 80 hours a week for like
Yeah.
5 years.
Right.
I got to take a step back. We both have kids, and so, it was one of those things that, you still have to be involved, but you don't have to be that involved as
Right.
long as you have the
No,
right
it's the
team.
balance of, family and business and health and all the other things that, you need to figure that out as you kind of forge ahead.
Yep.
One question I have, as you guys have built the platform, you talked about kind of the goal this year, which is certainly ambitious, 2,000 doors. Have you and Ferris ever considered or maybe explored diversifying away some of the risk, or kind of diversifying the platform into things that are very similar, albeit different? You get multifamily, obviously, that's where people live. Most of us have lived in an apartment, but very similar is student housing, you know,
Yep.
and obviously it's really multifamily adjacent to college campuses. And then I would also argue that when you come closer to the larger cities, you're starting to see also now a lot of mixed use. Typically, it's retail on the first level, and of course, you have apartments perhaps on second, third, and fourth. And those have all become, really, really attractive just as a way to diversify, and also offer perhaps your investor community, which I'm sure is very loyal, a different opportunity. Number one, of course, with a different risk perspective, perhaps just because the sector it's in, but also maybe just little different return metrics. I don't really know how student housing compares to multifamily, but if you're picking up an extra 2, 3, 400 basis points, it might be a nice complement to what you're doing now because you're already vertically integrated. I'm just wondering, has that ever been something that's been battered around or discussed, or are you staying true to the
Yeah.
lane?
Well, from a multifamily perspective, I'm probably going to always give you a market rent multifamily owner
Yeah,
operator. Maybe from a management perspective, we could take on different segments, whether it be the student housing or BTR
yeah,
or senior care, something along those lines that's probably adjacent to us. But from
sure.
an acquisition perspective, just because our investors know us as multifamily folks, like
Yeah,
that's what we built our career on, and I want everybody to know that that's what our focus is.
right,
Right
right.
now, obviously, we've done some M&A, right? But that's kind of a different play. It's not necessarily, meant to be an adjacent asset class. It's meant to be kind of complementary to what we're already doing, right? And so,
Mm-hmm.
from that perspective, obviously the return profile is wildly different, but also it's a different play, right? You're just no longer real estate. You're buying an operating company, and yeah, there's some value add and some things that you can do to kind of grow
Right.
the company, but that's kind of a different play. But I would say people, that follow us, they're saying, hey, okay, these guys have focused on multifamily. They're not chasing the next thing. But don't get me wrong, I'm an LP on a lot of stuff too. So, I mean, I'm not here to say that those other asset classes aren't profitable. In fact, they
Yeah,
are.
yeah,
I mean, we had self storage. I've invested in mobile home parks, industrial. I love all of those spaces, but I would have to feel comfortable, that I can either build the infrastructure fairly quickly to manage it and underwrite
right.
it first and foremost to make sure it's a good deal, or partner with somebody and learn the business ahead of really devoting a lot of our LP capital into it.
Sure. Yeah,
Because I think
sure.
again, people are looking to us that like, hey, it's vetted, it's packaged, it's going
Yeah,
to be managed
right,
well.
right.
I know what I'm getting into. That's the product that we're selling versus like, hey, this is our first industrial deal. We don't really know a lot about it, but trust me, we're going to figure it out. I think if I was an LP, I'd be like, yeah, that's way too risky for me.
Yeah, no,
I'll come back to me when you have your fifth deal and you've done a couple full cycles.
right, right.
So
When you started this journey and, you read the book, you decided you wanted to get into real estate and then transition from single family to, the commercial. Did you transition where you started off raising capital for others, perhaps as a co-GP to kind of learn the space and, get an investor group together before you actually went off and did your own quote deal yourself? Or did you just jump right in and put a property under contract and raise capital? Because a lot of people that get in the space, they get in that easier way, so to speak. I'll be a co-GP on one or two deals. I'm not an expert in underwriting, but I'll learn the business. I now have to take on some additional duties to
yeah.
qualify for the same exemption as a true GP. And, after maybe raising a couple $1 million, now I got a group of investors that know me, and the deals are doing well. And then I'll go start my own deal. And now I've got my investor database, so to speak. Or did you just say, man, I'm jumping in, putting this property under contract?
I jumped right in, man. I mean, my
Okay.
first deal, I mean, I was in the coaching group 2014, it took me less than 12 months to find my own acquisition. I raised the $800,000
Good
on
for
my
you.
own. And I was off to the races. I had originally, when I got into the coaching program, was open to some kind of a co-GP. Let me
Yeah.
learn, let me underwrite for you, let me do this or that. But at the end of the day, I just decided to kind of blaze my own trail. And I think,
Right.
for better or for worse, it allowed me, because it's just my personality, to kind of get my hands dirty, understand it from a very intimate level at
Right.
every aspect, right? From the underwriting process to getting it closed and the debt that we have to put in place and raising the money. And then ultimately, how do you asset manage and supervise a management company? And
Right.
for better or for worse, I learned a lot of things that during that process. And it ultimately was very, very successful. In fact, my first deal, till to this day, is still the most profitable one that I've ever had.
Oh, good for
And
you. That's
so,
great. It's a great
yeah, I mean,
story.
I'm not saying that was, it was probably more luck than anything, but I think you also there's some validity in being intimately involved in
Yeah.
these
Yeah.
deals.
Well, a lot of it is, of course, just timing. I mean, I hate to say that, you can time the market, but, as we all know, real estate's a very cyclical space. And, it's really dependent on when you get in, where rates are, and, how the cap rate either expands and contracts. There's obviously a lot of elements, but,
Yep.
that's the name of the game. And I think
Yep.
most people that get into real estate certainly, do understand that. Um,
Mhm.
for those of you that, might be new to the space that are, listeners of Capital Catalyst Show, you want to get started, you haven't done it yet. What's maybe a life lesson that you would share to somebody that's out there that maybe just has that limiting belief or is like, does this really work? Can I really do this? What would be a message maybe to somebody that's just kind of vacillating and indecision out there?
Yeah, and there's a ton of that. I mean,
A
I've
lot of
I've
that.
hosted a fair amount of events and networking events, and you'll see the same guys and gals come out for a year.
They
Well,
never do anything, but they go to all the damn events.
yeah, you're like, you got a deal yet? No, I haven't found anything that works. What I'm going to say, and this pertains to probably anything, right? You know, yes, there is a situation where all the bad things in your mind could potentially go bad, right? And actually happen on that investment opportunity that you're trying to get under contract. But most likely, none of that's going to happen, let alone maybe one, right? And
Mhm.
so a lot of people have a tendency to shoot themselves in their own foot because they almost water down their own deal, right?
Yeah,
To get
right.
to the point where, yeah, I knew it was crappy. Yeah, let's just move on, right? Well, it's because these are compounding issues, right? When as it pertains to commercial real estate, yeah, you jack your cap rate up, you lower your rent expectations, you jack up your vacancy, and then you inflate your expenses all at the same time. Well, guess what? No deal's ever going to look good. You'll be
Right.
sitting there for 20 years and you still will not have bought a deal.
Right.
And I'm not saying that it's all on a hope and a prayer, right? Obviously, you still need to underwrite the deal. You need to have conservative assumptions,
Sure.
and people need to do that. But you also need to jump in, right? It's like that ready, fire, aim from Tony Robbins that I'm very, very aware of. And it took me a little bit of time. There was some hesitation and fear that I was going to screw it up.
Yeah.
I mean, I had my parents on my first deal. How do you think that I was sleeping
That's a lot of
first?
pressure.
That's a
That's a
lot of
lot of
pressure,
pressure
man. I
right
wanted to
there,
get, I
man.
wanted to get, I wanted to get, invited back for Thanksgiving dinner. All right. So,
Yeah.
but the point is like, you've got to also take action. You've got to set aside that fear and you've got to try. And I always tell people the way that maybe easily get into there, go talk to the brokers, whether it be on the M&A side
Yeah.
or on the commercial
Yeah.
real estate side, just talk to them. Start underwriting investment opportunities, right? Start making offers, right? They're non-binding. It's not like they're going to like come and say, well, yeah, we gave you the deal and you didn't perform. Like, oh my God, and make a deal, make an offer that you're comfortable with, but start getting used to the process
Right.
of being this person. And I also tell people, put it out in the universe. you
Mm.
know Put it out on social media that you're doing this, that you're looking for these things, that you're
Love
looking
it.
to start this company or do this thing,
Yeah. Love it.
because then those people
Take on the
almost are a
identity.
sounding board for you, right? They validate that idea, and they give you an inspiration. They cheer you on, or at least your friends and your family should,
Right.
right? And so I always tell people, like, don't be like keeping it all to your, like, oh, I don't want anybody to know that I'm investing in multifamily, or I might want to go buy my own deal.
Hmm.
Put it out there, right? That's how the universe is going to validate if it's the right path or not.
Yeah, I tell people it's just that limiting belief that's holding you back from tremendous success,
Yeah.
And what I found interviewing people and of course speaking on stage is the most successful people, they have this innate ability to just block out the noise. It's like they got blinders, and in the world, we have all these distractions. Like you could be just, sitting on the fence because you're worried about interest rates or the economy or another war breaking out or, what political party is
Yeah.
in power. And I'm just like, there's all these things that are the distractions and you just can't focus on that. It's like, here's my goal. I want to build a real estate portfolio that's valued at X in the next, whatever, 5, 10 years. And you just put your head down and you just show up and you go to work and you make it happen, and you just block out the noise because the noise will always be there. You know,
Oh,
the
absolutely.
naysayers will always be there. The haters will always be there. The people that try to tell you you're crazy for doing that will always be. I mean, the funniest thing is when I walked away from raising millions and millions of dollars and being extremely highly compensated and said, I'm going to go do this. The biggest naysayer was my mom. She's like, are you an idiot? You're walking away from a very high mid 6 figure career with the pension, I mean, not pension, but a 401k and healthcare to do this with the uncertainty. Like the first thing she said is, don't you need to be like credentialed and licensed? I'm
I
like, I
know
don't
they
think
always say
so.
that.
Here we are running a multi-million-dollar advisory and consulting platform. We got our fund. We're raising money there. Life's good, right? But you just got to bet on yourself. And then, of course, you got to show up and you got to put up and you got to do the things that we know need to be done. And there are days, of course, that I don't want to get out of bed. But guess what? I get out of bed. I show up at the office. I inspire my team. And, you just got to keep moving forward. And I think that the biggest lesson I've learned is tremendous success. Certainly you and Ferris know this. It don't happen overnight. It's kind of like that poster we all see with the iceberg, right? And
Yep.
everybody sees the glitz on the top, the nice watches, the fancy cars, the big houses, and then they see all the shit under the ocean that nobody sees, which is, of course,
Yep.
the hard work, the long hours, the frustrations, the challenges, and it's not easy. Let's face it. If it was, everybody be doing it. But I do want to spend some time here and also talk. I know you guys got a big event coming up in February. Talk to me about that. What's the purpose of the event, and really, what are you trying to accomplish as it relates to the event? How that's actually tied to the business?
Yeah, so I mean, it's called the Multifamily Investor Network Conference. It's MFIN. We've been putting it on since 2019. I think this is going to be maybe our 15th or 16th one that we've done. We've had thousands and thousands of people come out. It's a one-day event. We used to kind of do it all around the country, and then now we're doing it once a year in
Sure.
Houston. It's going to be February 6th, I believe. But ultimately, it is a no sales pitch event where people can kind of come out, learn some of the basics, right? Intermediary type concepts as far as multifamily investing. We also have other panels that talk about operations and other asset classes and various other topics around multifamily or real estate investing, and sometimes even some other topics too. But ultimately, it's a one-day event mainly geared towards networking and trying to collaborate and making sure that people have a connection. I think at the end of the day, you're not going to learn anything from even a 3-day event. So I
Mm,
try to condense as much of the high value content into one event as I possibly can. I don't ever expect anybody to buy anything at the end of the day. We're not in that space,
yeah.
but we invite a lot of our friends to participate, whether it be on a panel or as a speaker, and they're there to give back to our community and
Mm,
and ultimately help educate them on how all of this works, right? What is multifamily investing?
yeah.
What is the economy going to look like this year?
Right.
Right? How could you get into the space, whether it's a passive investor or as a general partner and want to go find your own deal? And
Mm-hmm.
so, we've had a lot of fun doing it. It's been a good brand builder for us. But we don't really get anything else out of it other than we've kind of built this platform that I think people enjoy coming to. We always get good positive feedback. Otherwise, I wouldn't do it. We don't make any money on it. You know,
Yeah.
but it's right up the road. It's for people that are familiar with Houston, it's in the Memorial City area at the West End.
Mm-hmm.
And really, really excited to have people out this year because I think this really is starting to turn, right? I mean, I
Mm-hmm.
think,
Yeah.
we've been kind of saying that the last couple of years, but, we have a lot of contacts with other management companies, with a lot of lenders that we have great
Good.
relationships with.
Yeah.
The dam is starting to break.
Yeah.
And so
Right.
a lot of the better basis deals, they might be distressed, but you're going to get a great price on them. You're going
Yeah.
to get great terms on them, are starting to come to fruition this year. And that's why our goal of 2,000 units is so ambitious, because we feel like we can swoop up a lot of stuff, especially from the lender contacts that we have,
Mm-hmm.
at an incredible basis, and then you ride that back up, and then you sell at the top of the market. I mean, this is
Yeah.
just how it works, right? It's cyclical. People just got kind of, I think, after the GFC, right? People kind of got caught up with real estate's always going to go up, right?
Mm-hmm.
And then the jolt to the system was COVID, and then it kind of started going back up again. Well, then rates kind of hit everything, then everything starts kind of
Good.
collapsing.
Right.
But it's
Right.
all the same thing, right?
Yeah.
And so you have to hit it the right part of the cycle.
Yeah.
And so we're trying to get people excited and inspired to get back into multifamily, and that's what it's all about.
Yeah, no, I would agree. And I think that for people that want to learn the business or people that want to network, come to the event, the Multifamily Investor Network in February here in
Yep.
Houston. I know a lot of the people that'll be there, which is great. And, I think that what you're doing in terms of the panels, the speakers, is educating so many people that get into the space. They overlook the regulatory environment. They don't know
Yep.
what they don't know. They start raising money from family and friends. Deal blows up. It just takes one disgruntled investor to open a can of worms, folks. And you can be accused of selling unregistered securities if you haven't filed your Reg D notice filing.
Yep.
There's procedurally things that you need to do just to be compliant. And a lot of the people out there that educate have never been compliant because they don't know what they don't know, and they just raise money. And, they're breaking the law. And we see a lot of problems in this space, raising money for other people, which you cannot do and get paid a commission or a transaction based fee, or even some of the people advertising services now on LinkedIn and on Instagram. Oh, we'll get you investor leads, or we'll help you raise capital. Then you get their contract that says we take a consulting fee. And I'm like, you can't do that. It's against the law. And they're like, oh, no, yes, we can. It's a consulting. I'm like, I don't care what it's called. It is a commission disguised
Yeah.
as a consulting fee. But anyway, no, this has been great, Ben. I really, really appreciate your time today. For those of you that want to learn more about Disrupt Equity, just Google the firm. Ben and Ferris have done an absolute great job. And for those of you that are going to be traveling to Houston, obviously, for the event, potentially we'll see you there. So Ferris, thank you so much. Again, this is Brad Blazar saying to those who enjoyed this episode of the Capital Show, click that little subscribe button, or better yet, just give us a thumbs up, give us a rating, and we hope to see you again on the next episode of the Capital Catalyst Show. This is Brad Blazar saying goodbye. Until next time.
You've been listening to the Capital Catalyst Show with Brad Blazar, the best place for entrepreneurs interested in doing something big in life, having considerably less stress, and a more balanced life. Go to bradblazar.com for more ways to accelerate your success.